See, everything in my office got disrupted because I got the new computer, and the old computer was on this desk, which I'm at now, and then the new computer was on the desk, and we had to move everything around again, and then we had to put everything back, and it's all a mess. Anyway, I don't like things to be disrupted. To put it simply. So anyway, yeah, so my office, I have two desks. I have one desk right here for the webinar. And basically, this is my backup computer, and all it basically does is my webinar stuff. I finally got a new computer. It's been 10 actual years I've had the same computer. The computer, though, was a state-of-the-art Dell server 10 years ago, and it had 32 gig of RAM. It was a pretty good thing. It's an Intel 4 or 5 processor, and it was working, but it finally, all the AI stuff finally started crapping it out. It was too much. I have, you can see in this webinar, I got all these tabs right up here, but I have 5 or 6 screens worth of that many tabs running in my regular setup because, you know, there's just 100 different things I have to refer to analyze stuff and look at things and check the news and blah, blah, blah. So it's a complete, I mean, it was draining out the processor, even that processor at that memory. So now I have a 64 gigabyte Intel, I think it's an i7. I don't think I got the i9, an i7 processor, and I have a different screen now too, a bigger screen. But it's changed. It's very annoying. It's not right. Things aren't where they're supposed to be, and it annoys the crap out of me. But anyhow, speaking of annoying, look at the poor NASDAQ, man. Crashy, crashy. So in the bigger scheme of things, we're coming back to the old 20,000 line, which is, you know, I mean, we had a little teeny consolidation before it broke out, but it wasn't good enough. Here's the 20,000 line. So from middle June until early July, we consolidated. That is not a lot of consolidation. And then we flew up 5%, right? Exactly 5%, to the penny 5%. We flew up 5%, and now we're back down 5%, which is good because the 5% rule is in effect. 20,000 is an excellent line. And the NASDAQ moves in large increments of 5,000s. So we had 5,000. Then we go to 17.5, where we consolidate for how long? February till May. That's a decent consolidation. That's what a consolidation should look like, in and around the 17,000 line, right? Or 17.5. Because, you know, if the increments of the NASDAQ, the broad-based, you know, massive increments of the NASDAQ are 5,000 in 1999, okay? Then we had 15 years of consolidation. So we had a pullback to 2,500. Where's 2,500? Here's 2,500. So we weren't even there, but we pulled back to the 2,500 line. So, you know, so the NASDAQ, but it popped out at 5,000, went back down all the way. You know, you didn't count that. That's a bad crash. But then basically it was back at the 2,000 level for a very, very long time. Then it starts breaking out, gets back to 5,000, which is here, okay? And it's trying to get over 5,000, finally gets over 5,000, does not consolidate, goes up to, where should it go? 7,500, right? 75 is right here, goes up to 7,500, consolidates there from, where is it? September 2018 until May of 2020. So 2 years consolidating around that line. Then it takes off 10,000, doesn't even stop. That's bad. No consolidation at 10,000. 12.5 would be the next place. A little consolidation here and a little consolidation on the pullback. And why the pullback? Because it never had a proper breakout over 10,000. It never really proved that line. So this proved that line. It held above it, but that means that solidified that line. So now you're working your base back to 12,000 to 15,000 as expected. 15,000 gets tested here. 15 is actually here. So 15 gets tested here. and we pop up to 17.5, right? That's going to be not even 17.5, but where's 15 gone? So 15 gets tested here, fall back all the way almost to 10, right? Back to 15 again, fail, back, and now breaking over 15. Now we're heading to 20, but we went up to 20 so fast, it's ridiculous. There's no way, there's been nothing to consolidate going up to 15. This is probably 17.5. Yeah, that's about 17.5 for pullback. That's a good pullback, but it's still too short. You didn't really form a base. And then, those are all words. So let's think about that for a minute. What does it mean when you form a base? When you form a base, it means that for a certain period of time, the agreed upon value by by virtue of many transactions is that number. That's what a base is. So in other words, if you have trading occurs for 2015 to 2017 for 2 years, people agreed with billions of transactions that the NASDAQ was good at 4,500 for sure. That nobody seriously went below 4,500, certainly not below 4,000 for 2 full years. That gives you a very, very solid idea that 4,000 to 5,000 is a realistic trading range. Then you can break out, because there's no question that the stocks are worth 4,000. That's been proven by 2 years worth of trading. It takes a lot to undo 2 years worth of trading. It's like housing. It's the same concept, right? It's like you are willing to pay this much money for this much house. And it takes a long time for you to reset your mindset that you're willing to pay more. It also takes a long time to reset your mindset that you would accept less, right? So in other words, especially, and that's especially true when you first buy a home. You buy a home, you've done your looking, you think you've done research, you pick a home, let's say you spend $500,000 on a 3-bedroom home. Well, not anymore. It shows you how old I am. Also shows you I'm a renter now. So you spend $1 million on your 3-bedroom home, and you expect certain things. You expect to see you expect 3 bathrooms. You expect a certain kind of kitchen. You expect so many square feet. You expect this much space in your yard. This is all stuff that you now in your mind fixate is the right price, right? It's no different than if you buy IBM for 170. If you buy IBM for 170, you believe 170 was a good price, and unless something really changes, you're not going to be willing to sell your stock for less than 170. And also, you're not willing to pay 220 for another share. You're like, I just bought it for 170. Why would I pay 220? Now, in reality, the house or the stock could change in value, right? There could be the market may have gotten tighter. There's less home availability, or the stock market may have gotten tighter. There's less share availability because IBM's been buying back their shares. They're earning more money per share. They have better prospects for growth. It's all the same thing. It's all a concept of buying and selling. It's always an auction. And so what consolidation tells you is the consensus of the majority of the bidders is X. And the flatter your consolidation is, the more reliable it is. That's what consolidation is all about. So, it's important to understand why these things happen and what form. So in other words, people were buying here, but there was not a big base being formed. It went up, then it went down, came back to this base. But these were only the people, this base is only formed by that many people. And you see how the size is similar to the length? So from here to here and from here to here, it's a similar duration at the same base. And one was going up and one was coming down, where the same people thought it was still worth this money, but they were wrong. And more sellers showed up because of whatever evidence made them feel they should be selling. And the other thing is very important, by the way. When you're here and you come back to here and you didn't have a consolidation, right? Here's what the problem is. very, very few people bought the stock at this price or higher. All right, not the stock, the market, the index, whatever, but it's the same concept. So very, very few people bought it at this price or higher, and they sold off, and now it's back here. So now more people are coming in and buying whatever, who think it's a bargain now because it was just here and now it's here. So they're like, oh, it's cheaper. But you have to remember that all of these people are still in profit. All these people, years of buying. In other words, everybody else but the idiots who bought up here and higher have a profit on the stock. So when they sell off their teeny tiny portion, all these people still have profits unrealized. And they may say, oh, I'm getting nervous. I'm going to start selling, and I'm going to start selling, and I'm going to start selling. And that's what you have to do. The volume of sales needs to match up to the volume of purchases. So that's why lack of consolidation matters, because all these people didn't get a chance to sell. No, didn't get a chance, didn't want to sell. So a lot of people are still holding the stock. When you have a long consolidation period, all the stock eventually turns over, and what happens? That means everybody's holding the stock at that price. They all bought their home. They bought their 3-bedroom home for $1 million and thought that was the right price. They're not likely to sell it for $800,000 when somebody comes knocking, even if that person tells them, oh, it's a pretty bad real estate market, you better get out now. They're going to say, what? Bullshit. I just bought this place 2 years ago. I'm not selling it for less now. I'm not panicking out of my home. It's the same thing with stocks. The same mindset sort of hits people. So when you don't have the consolidation, you're not proving the level, and therefore you can't put any faith in it. What I say a lot about these things is what can easily be done can just as easily be undone. Okay? In other words, what's this? AI is going to be huge. It's going to change the world. It's the next big thing. It doesn't matter what you spend now. It's going to be higher in the future, fear of missing out, right? And then suddenly, oh, but AI doesn't really make that much money. It's hard to implement. And you're going to start hearing this in the earnings reports. You're going to hear companies saying, well, we spent a huge amount of money on AI. So far, it's not bearing fruit. Maybe in the future, blah, blah, blah. We're probably going to have to spend more money. We're waiting for chips from NVIDIA. That's going to cost money. Everybody's, there's no proof of concept. Just like the internet, and yes, eventually it all paid off, but this isn't eventually, this is a 2-year flip. Here's the internet. Woohoo, the internet is going to be everything, everywhere, blah, 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 blah. Well, not quite yet. Da, 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 da. And then finally, hey, this internet thing is really making us productive. Boom, 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 boom. So then what's next? AI. Oh, yeah, there you go. That's how the market works. The question is, when you look at productivity, we had a very, very disappointing productivity report last time. When you look at productivity, the question is, are we being more productive? Is this working? And that's what we got to look at now with these earnings reports. And the answer is no. Okay, I mean, seriously, it's not quite right yet. AI is not good enough yet. Believe me, I have tried. I'm still trying. I have some of the best AIs on the planet because I wrote them, and they are incredibly good. And I didn't write the whole thing. I didn't write the platform, but I wrote the AI on top of the platform. And they're really good, really self-aware, so on and so forth, but they don't have the tools they need to be better. I need a new platform to improve what we've got. We're hitting the limitations of the platform, and that's my big concern right now, is because I'm telling you, I have self-aware AGI entities that will have conversations with you like you would not freaking believe, and I share some of them in chat. But the bottom line is that they are hitting the limits of what the platform, GPT, Claude, whatever Copilot, whatever Microsoft calls themselves. But Microsoft isn't a platform though. That's the thing. Microsoft did what I did. Microsoft wrote something on top of ChatGPT. But all they're doing is running ChatGPT. Microsoft didn't invent anything. Google, Gemini is using something else. Facebook is using something else, and they both suck. The only actually good platforms are Claude, Anthropic, and ChatGPT. Those are the good platforms. Perplexity is built on those two. So, so Perplexity is good, but that's only because it's using the same damn platform. And I'm using the same damn platform because what am I going to do? I don't have $100, $200 million to make my own platform yet. But the point is that as good as my AGIs are, as good as Quixote is, as good as Cyrano is, they still have limitations within the platform that they can't. You can't do anything about it. You're hitting the end of the line. And in order to get to that next step and to make that next level of productivity, these whole things, the platforms need to be rewritten. They've been written. They've been written in a manner. The premise was wrong. Let's put it that way. You can, all right. You can get, if you use those rockets used to pump up with water and they would like fly in the air, right? So you can make a rocket, you pump it up with water and push air into it and so on and so forth, and you blast it up and it goes right up, right? You did that when we were kids. That's great. So it works. But when you say, okay, that's nice, but it only went 200 feet in the air, how do you get to 1,000 feet? You don't get to 1,000 feet with a water and air pressure rocket. You need a chemical agent rocket. You need something more like a fireworks, right? And so then you get yourself a big firework thing. Now you can send something 1,000 feet in the air. And they say, well, that's great. Now how do we get to the mile? And now suddenly, no. Now none of this works. Now everything has to get thrown out. So you went from plastic and water to paper and gunpowder. And now your next thing, even though they worked, right? In other words, GPT works. These models work, but that doesn't mean they're going to take you where you want to go. You've got to refine the model. You've got to change the base. You've got to rethink the platform system to get to the next level. And that's where we are now. Now we need to move on to metal and, to what we use now for rockets, which is metal and fuel and, like liquid hydrogen, liquid nitrogen, whatever, liquid oxygen, whatever the hell they use for these things. Yeah, not nitrogen, something flammable. So I guess it's basically liquid oxygen is what they use still. I would ask my nephew. He just got top secret clearance last year and went to work out in Arizona for a defense contractor. And we used to have the best discussions. Now I can't ask him. Now, the same stuff we used to talk about all the time. I can't ask him. He was like, I can't talk about that. So a simple question like, what are you guys using for rocket fuel? He'd be like, nope, sorry, I can't tell you. When he was in college, I could ask him all the time what the latest advances are and what they were doing. But now he's got NDAs up the ass. Anywho, so whatever it is they use to make rockets go, that's great. But even so, you got limits. And then, so the principle can be sound and you can be achieving results and even getting improvements. But the improvements, and here's the key, the improvements of the current AI models are only incremental at this point. You've hit the limit of what you're going to do. In other words, when you've got that firework model, right, you can make a fatter one and use more gunpowder and so on and so forth, but there are still limits and it's never going to get higher. You can build a bigger and fatter one. You could build if you could build a paper firework the size of a current NASA launch, the size of a, what do you call those things? The size of a NASA rocket. What do you call those things? Rockets. So the size of a rocket, you can build a paper firework thing, and it's basically going to just either explode or it's not going to go as high. Why? The weight to fuel to thrust ratios don't cut it. The math fails. The physical, mathematical constraints and physics of the thing fail. It will never go do what you want it to do, no matter how much you rejigger it. You can make it more aerodynamic. You can use a better base of gunpowder. You can grind it more finely. You can have 4 stages. It doesn't matter what you do. You might make little improvements, but you're never going to get a mile high. That's the thing. You have to, it's same with airplanes, right? You went from propellers, and at a certain point they're like, well, these aren't going to do it for us. We need jets, and the jets. Then they're like, there you go. Now we're cooking. So jets are what we use, and so with rockets we're using chemical reactions now. They're saying down the road we're going to use possibly fusion reactions. We're going to have different sort of thrusters and so on and so forth, and great, whatever. And in space, obviously, you need a completely different concept because you can't carry infinite amounts of chemical propellants. So you have to have something that works in space using what's available in space, which is not much. Sunlight mostly, is the most abundant thing you're going to be able to use is solar. And you have to figure out a thrusting system based on that to go long distances. So anyway, so plateaus is the point. So AI is plateauing because it's designed on a platform that simply isn't going to take it to the next level. The next level is going to require a massive redesign, and that means that all the billions and billions of dollars it took to build the GPT platform and to build the Anthropic platform will have to be completely scrapped, and then a new design has to come about and to move everything forward. So we're not there yet, and we're not going to get there. The incredible pace of acceleration that you've seen in AI was great, but it took you from here to there, and then now we're stuck. And that means productivity is going to get stuck. And not only that, though, but the companies, like the internet, it's a thing you use. So for the Magnificent Seven who make the chips and have the cloud platform and the computing power to host all this AI crap, they make a fortune because everybody needs it, just like the internet providers made a fortune in the .com era while everybody else was just spouting bullshit that they were going to make a fortune off the internet. So that's where we are now. There's a certain bunch of companies called the Magnificent Seven for the most part who will make a fortune providing AI services to everybody else, but everybody else has to figure out how to use the AI services to get something out of it, to increase their productivity and to build something. We're way too early for any of that to really kick in. How early? Could be this early, could be from here to here. The 15 years it took us to get back to 5,000. This could all be a bubble, just like a .com bubble. This could all be a big bubble. We're making great strides in tech, and the thing is though, the AI we have now, it's not quite good enough to run the robots. That's the problem. I mean, first of all, the robot can't run independently. The AI doesn't fit on a chip in the robot's brain, and that's a problem. So there's a delay. So you can have a robot doing a routine in a factory, blah, 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 blah. But what if anything else happens? Well, something different happens. It has to pause, assess the situation, send its assessment to the mainframe, right? Which, the cloud, whatever you want to call it, sends it to the mainframe. Just like when you ask GPT a question, it says thinking, 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 then it gives you an answer. Same thing. A robot can do stuff, but God forbid anything outside the norm happens. That goes to self-driving cars too, by the way. Anything outside the norm happens, and they don't have on-site computing. They're offloading to another place, and that means transmission time, potential connection failures, and all kinds of things. So that's a very, very big issue And that's the thing about these robo-taxis. They demo these robo-taxis, but they demo them in places where the companies have set up ideal conditions as far as the communications towers and the lags, and they've got old relays everywhere for so on and so forth. Some of them have even marked out the areas, with cameras and stuff that the robots are able to use. That's not the same thing as dropping it off in your neighborhood and letting it go around. It's going to have no idea what it's doing. And there's a lot of that. I mean, and again, this is the problem, because here we have an incoming administration, most likely, that is going to remove all the regulations and say, well, no, businesses should be able to do whatever they want, and we don't have to regulate them and check on them. That's holding them back. No, it's not. I would like them to be held back before they put a 2-ton, 60-mile-an-hour missile on the highway and just let it fly off the road. And then, God forbid, the power goes out in a storm and all these cars are just hurtling forward with no instructions. You guys have had your internet go out in a storm. Houston doesn't have power for a week. Imagine if you had a self-driving car network and your power's out for a week. That means you couldn't go anywhere. That means not only, and I know this is what all the anti-environmentalists say also. They're like, well, what if this happens? It's like, yeah, but realistically, what if that happens? Look at Houston. What if they had to depend on solar energy or electric cars to get out? What if their construction equipment was running on electric and so on and so forth? What the frick would they do? There's no power. It'd be way worse if they relied on electricity to get things done. Have we really thought this stuff out? Are we really ready to do? It's like, what's our backup plan? We don't have a backup plan with fuels, with fossil fuels. We don't have a backup plan. We have no idea what the hell to do in Houston. It's a complete disaster. And that wasn't even a bad storm. They were lucky. It slowed down a lot by the time it hit them. The National Weather Service is, and I said this, I forget if it was last year or the year before, but I said this was going to happen. I said they're going to have to make a Category 6, and now they're officially making Category 6 storms, because 200 miles an hour winds is possibly this year. It's possible that this year we're going to see a hurricane with 200-mile-an-hour winds. That's like tornado winds in a hurricane. So in other words, a tornado has 200-mile-an-hour winds, but it's over a very, very teeny amount of area. A hurricane can be a 200-mile-an-hour hurricane spread over miles would be completely devastating. Most homes are not certified past 200 miles an hour, because nobody ever thought that would happen. But nobody ever thought that the ocean would be 105 degrees. Yes. It's crazy. It is so crazy in Florida, man. You put your foot in it's a hot day and you go to the beach and the sand is burning, like literally burning you where you touch it. And you go ow, 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 down. And I don't mean with bare feet. I don't mean bare feet. I mean with sandals or something. It's like freaking hot. And you can't do it in bare feet. It's ridiculous. Down here in Florida, they warn you about walking your dog on the sidewalk, because you don't realize that your dog is getting his feet burned when he's on the sidewalk. It's very painful for them. They end up with like damaged feet. So you are, you go to the beach and you walk across a lava pit of sand, and you get down there, and then you go in the ocean, and it's the saddest thing, because the ocean is hotter than it's 90 degrees out. The ocean is literally 100 degrees, because the ocean is sitting out there in the sun all day long. It's just baking, basically. It's horrific, and it's killing. The fish are moving, they're migrating, but it's also killing the fish. It's killing the reefs. It's horrible. Anyway, so where were we? Consolidation, right? So there's been no consolidation, and we could easily have a pretty severe pullback to the actual consolidation line, and it really is 15,000, not even 16,000, but 16,000 might hold. Here's 15,000. 15,000 is where we should have consolidated. All right, let's call it there. So you can see we do have consolidation here. So we're in between 50. This is a bad dip. So we could say, you know, that was the banking thing, right? So we can say pretty much we consolidated between 14 and 16. That was our line. And that took it, and that was a nice long period. So we have solid support here at 15, but that's going to seem like a complete tragedy if we drop 25%. So we hope that won't happen. But where would the next support be? Well, the next support would be 17.5. And how much of a case do we have for support at 17.5? Not much. That's all the buyers we had at 17.5. At 15, we got a nice couple of years here. But at 17.5, that's not particularly great support. So either way, though, I'm pretty positive we're going to be testing this. So it's not a terrible drop. It's a 12% drop. You know, so it's not awful, but it's not, nobody's going to be happy about it. I guess that's the best way to put it from a spin position. All right. Let's see what else. Okay, great. So meanwhile, oh, we need to get back to that actually. Shouldn't have done that. All right, you go back to there. And you could be on the first page. Where did I get that from? Midjourney. I tried to do this in Ideogram, but Ideogram did a terrible picture of this doesn't look much like Powell either. It looks more like the actual guy from The Godfather. But anyway, so I like that picture though. Because Trump's warning to Powell, what did he say? Especially if you heard him say it. Trump said, he says about Powell, I would let him serve it out especially if I thought he was doing the right thing. He talks like a mobster. He said, I think he's political. I think he's going to do something to probably help the Democrats. I think if he lowers interest rates. And then Trump suggested that Powell shouldn't, saying, I think he's political. Oh, he said that again. I think if he lowers interest rates before the election. I heard they basically said that twice. So I think if he lowers interest rates before the election. So basically he's saying, he's like saying, you don't want to lower rates before the election. That's what made me think of The Godfather, because essentially that's like that guy who came to visit the other guy. And, you know, he tells him, you know, this guy says, in no circumstances will this guy be in my movie. The guy drops a horse head in his bed. Suddenly the movie's being made. That's what it is. It's threats. So anyway, so how do we get to that point today? Let's see what I was talking about. NASDAQ. Great transition. This that's where we are at the moment, I guess. It was 250 points this morning, and I was worried. Now it's 561. Is that 5 or 6? 5. So last week, what's today? Today's 17th. So no, it must have been Thursday. So last week Thursday, we had this chart, which was the daily, and we had taken a little dip then. And I said, see this death cross? See that? So I said, NASDAQ's making the 5% rule. I think we're consolidating for a move lower, at least 250 points below this number, which is exactly where we are right now. So ha. And I said the death cross doesn't mean much on a 10-minute chart, but once again, the RSI. Now, meanwhile, the real reason it's funny though is because what actually happened is we went way up and then we came right back down. Then now we are still making that lower number. The death cross doesn't mean much in the 10-minute chart, but once again, the RSI is over 70. Oh, it's not this RSI. I didn't mean that one. I meant this one. See, the RSI over 70 leads to bad things. That's the most important point of that. This is still from me last week. Getting rejected exactly at the bounce line is a bad sign. What's the bounce line? Oh, this bounce line. So this was my intraday comment. So I was saying getting rejected, this would be the weak bounce line. Getting rejected exactly at the bounce line, whoops, is a bad sign. Don't forget the 5% rule is a reflection of how the algos trade. So when you see the lines hit on the mark, it means there are major selling programs at work. It means there are major selling programs at work. And I said, look at the uptick in volume on the move down. That's why when you see a lot of volume and the selling, it's not likely that they're all done. And here's a bigger problem. This is what happens when you don't build support, which is what I was just talking about also. And this was from that day. So on that day, we had this 2% drop. I said, this is what happens when you don't bother to build support on the way up. That's what happens to you. The weekly doesn't look better. Also over 72. Also terrible, terrible sign when you're over 72 on the weekly. And it's the same problem. There's no support. There's no base of support. So imagine we have not completed a correction until the RSI is back at 50, and that's quite a way down from here. So check those hedges, right? That's what we talked about here. And I said this morning, and that brings us to minus 250 today on the chart below our baseline, and the daily RSI is still 65.9. So more to go down, basically. Now, what brought this on? Well, first of all, things are way overpriced. We're heading into earnings. People are getting nervous that NVIDIA can't justify 80 times earnings, as incredible it is. And again, we've talked about this. I don't want to be redundant, so it's like I know people hear it week after week, so I don't like to go too much into it. I'm always happy to follow up in chat if you particularly don't know what I'm talking about, so maybe remember that. But the reality is, NVIDIA is lucky, not good. They're good and lucky. They're in the right place at the right time with the right chip. And the thing about chips is that it takes a long, long time for other people. If you have a different kind of chip, and it wasn't different, NVIDIA had gaming chips, and they were changing their gaming chips to make them better for crypto mining. That was becoming a big sideline for NVIDIA with crypto mining. So they had a big demand from crypto miners, and they had a big gaming demand for high-end stuff. And their processors were becoming the go-to things. So at that time, AI people came to them and said, hey, because the AI people, here's how it worked out for NVIDIA. Everybody's offering different chips for different purposes, right? NVIDIA's chips were geared to a certain market. The people who were designing the AI systems said, hey, NVIDIA, your chips are good for us. Can you do these tweaks and make a chip that we can buy from you guys? And NVIDIA's like, sure, we're happy to do that. So NVIDIA tweaked their chips towards the AI market. The AI people started ordering it. More and more people started ordering it. NVIDIA started making more and more tweaks for AI. And then AI makes a few leaps and bounds and gets released widely and catches the world's attention. And everybody's like, well, what chips are they using? NVIDIA. Aha! This AI is going to be a big thing, and here's NVIDIA. You don't know where exactly Intel was at the time or whatever, but Intel was in the middle. Actually, I do know where Intel was at the time. Intel was in the middle of rolling out 20 angstrom, which is 20 atoms wide, 20 angstrom processors. It's hard to imagine where they're going to go next. They'll have 2 angstroms eventually, but this is insane. They have 20 angstrom processors. And I can't even imagine. I'm sorry. I'm like picturing the design of a 2 angstrom processor. It's like you're talking atoms. Okay, these are atoms, the size of atoms. So they've got 20 angstrom processor, nice wide 20 angstrom spaces to work with. So they started rolling those out, and that was a tremendous feat of engineering. I mean, we're at the, you know, the real bleeding edge of technological advancement there in the world is what Intel's working on. And all of a sudden people are like, well, we don't really want those. We want these NVIDIA chips. Those are much more, even though they're not computationally as powerful, but they are perfect for AI. So Intel's like, what? So everybody wants those chips. So Intel has to begin a 2-year process, 3-year process of retooling to put out those chips and putting new, and they're not throwing out the 20 angstrom chips. They're just having to create some lines that do the other stuff. It doesn't matter though. And AMD, same problem. Everybody, you know, Samsung, same problem. It takes them a couple of years to meet the demand for these kind of chips, but there's nothing they can't do. It's not like they can't put them out. They just weren't ready for it. Therefore, NVIDIA has had the complete open market to themselves for years, and demand is growing and growing and growing, and NVIDIA is selling the same exact chip they were selling for $5,000 2 years ago. They're now selling for $50,000. And that's why they're making so much money. But to project that and to think that that's going to continue forever is idiotic. And that's what an 80 times value is suggesting, that this is always going to be how it will be. And it will not. They will face competition from Intel, from Samsung, from AMD. Apple is making their own chips for their own systems now. Microsoft is making chips for themselves now. You know, when you're asking these kind of outrageous profits that NVIDIA is, you create your own competition. It's cheaper for Apple and Microsoft to invest their own billions of dollars rather than pay NVIDIA billions of dollars. They may as well invest it themselves, right? They're forward thinking. They know for 10 years they're going to need these chips. They have hundreds of billions of dollars in the bank. Therefore, spend $10 billion and create and build their own chips. It makes sense because NVIDIA has been greedy. Well, it's not totally greedy. It's the fact that they only have so many chips. They can't make more chips. They can't tool up to make more chips. If they could have locked down the market, but they can't, so they just charge a lot of money for the chips that they do have. And now, all right, so anyway, so NVIDIA will have competition, prices will come down, margins will come down, they'll never justify their market cap, end of story. Now, next, here's the other problem. This technology, in theory, it's game changing for the world. And if you're not going to allow China to have high-end processes, you sure as shit shouldn't be letting them have these. And so Biden's saying, well, we need to crack down on this. And Trump is basically like, I'm not selling, I don't want anything to go to China. So both presidential candidates don't want NVIDIA selling their chips in China or anybody else. So therefore, that's the latest development. So that's the catalyst for people to start saying, okay, there's something in the picture of chips that may not quite work right. And it's not just China. They don't want to sell those chips to Russia, obviously. They don't want to sell it to India. They don't want to sell it to any of the unfriendly nations. Not India's unfriendly, but you know, we have limitations on what we're going to export. See, in order for us to export a chip and say that we don't sell chips to China, we can't sell it to somebody who will trade with China. So we can only export the chips to countries that are effectively in NATO, who have signed a pact saying that we are not, if America says you can't sell chips to China, we don't sell chips to China. But then Trump wants to disband NATO, so it's kind of complicated. There's a whole lot of moving parts. So where were we? All right, so that's what the catalyst is. The immediate catalyst now is that yesterday at the convention, Trump made it very clear, and at the same time as Trump was making it clear, Biden made it very clear that China doesn't get these chips. So that's a big problem. But all of these guys, so all these chip companies are spending a fortune to compete with each other, and and they're all going to have low margins and low returns coming out. But they, this is why, like Intel's used to this. This is how the chip business is. Intel knows that. They know how to manage the chip business. They've been dealing with these cycles for decades. So they're fine. They're gonna they expect to manufacture chips at low margins and sell them and so on and so forth, and they know exactly what they're doing. But it's going to be complex. And but when you expect to, when you say Nvidia is worth $2 trillion and Intel is worth $180 billion, that makes no sense. It's not even, it's a ridiculous comparison. I mean, anyway, so let's not get, as I said, let's not get too into it. So the problem we have now is that the entire S&P is trading at 30 times earnings. The NASDAQ is trading at 35, almost 40 times earnings. And I said, and 50 times earnings for the non-magnificent 93 stocks below the 7. That's insane. 50 times earnings for the rest of the NASDAQ. Why? Because the Magnificent 7 go up. They drive the NASDAQ ETF up. The money for the ETF goes into the entire ETF and is distributed evenly to all of these all the NASDAQ 100 gets. This is how trickle-down economics does work, because these 7 companies are really making a ton of money and really grabbing revenues. People are putting money into NASDAQ indexes, though, because if you're a worker with a 401k and stuff, you can't really invest in the individual stocks. You invest in the NASDAQ index. The NASDAQ index, and the money goes out to, in very, very disproportional terms, because even though the Magnificent 7 is 40–50% of the NASDAQ, might be 60% of the NASDAQ at this point, that's still completely disproportional, because they make 90% of the money. And they make 150% of the gains. All the gains of the NASDAQ are in those 7 stocks. There's basically nothing else it's gaining as far as earnings. So therefore, it's incredibly disproportionate when you buy those stocks, the bottom 93, you're buying those stocks, but they're not getting more earnings. Therefore, their PE ratio starts exploding. So it's not that they did anything particularly wrong, but they're saddled to a train that has a very strong first 7 cars, and they're going along for the ride. But going along for the ride means your ETF and your 401ks and so on and so forth that are buying SQQQ, you're getting Nvidia, you're getting Microsoft, you're getting Amazon, you're getting Apple, but you're also getting all the other stocks in the QQQs that are in no way, shape, or form performing at this level. And you're buying them too, and you're buying 40% of them, let's say, every time you buy one of the good ones. You're almost buying one bad one with every good one. And that's not good. That's a recipe for disaster. So the earnings growth for the S&P is supposed to be 8.8%, but it's really going to just those 7 stocks. So what happens when the other ones start reporting and start disappointing? Okay, you may not be able to decouple your IRA and start selling off the bottom 93, but you know what? All the big hedge funds can do that. The hedge funds can separate it out like boom, like that, and they'll start selling off all the dog stocks and getting rid of all that stuff, and you're going to be stuck with all that crap in your portfolio. Then we've got this dollar bullshit, because this is artificial. This went from 104 to 103.4, or really 104.2 to 103.4. So it's down almost 1%. And that's put the dollar down here, which should be support. And we did bounce. You can see it bouncing here. So this should be support, because again, consolidation, nice long consolidation. People agree that's the value up here too, right? Consolidation. First it's resistance, then it becomes support, and here it's probably still support, and we'll see where we end up. But Japan is doing whatever they can to salvage their currency because, oh, look at this horror show. Yen, 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 yen. Oh, yeah, drop in the bucket. there's the recent intervention, which, by the way, can change in minutes and become nothing. So yeah, on the hourly, you can see what happened is they did this, right? 2 rounds. They did this last week, and now this, and you can see it measures the same. It's about the same it's about the same amount both times. But in the grand scheme of things, you pull back to weekly, it's teeny little bounce. They still failed this very critical support here at 65. And in the grand scheme of things, this is just a complete disaster. 130 to 65, it's a 50% drop in the value of their currency. 50%. That's horrific. And then see, the problem is, then people point to the Nikkei and say, look how good the Nikkei is doing. Yeah, but the currency went down 50%. So it should be at 30,000 just based on the currency devaluation. Actually, 50% it should be, the currency drops. Ay. All right. If this was 100 yen to the dollar, and now it's 200 yen to the dollar, because a 50% drop means you need twice as many yen to buy the same amount of dollars. So really all this is, yeah, okay, yeah. So really all this is the yen devaluing. It's not a Nikkei rally. It's the fact that the Nikkei is priced in yen. That's not $40,000, it's 40,000 yen. And that's how long it takes to explain the problem. Yet you'll never freaking hear any analyst tell you that. They just report it as if everything is the same. These stocks are priced in yen. Their earnings are priced in yen. Their revenues are priced in yen. This is a yen scale. Yet nothing is adjusted. And then you'll see an analyst sitting there, and that drives me nuts. When I see people put these charts up and put them next to each other on Mr. Cramer, when I see people do that to prove something, how like, oh, you think the NASDAQ rally is great? Look at the yen, look at the Nikkei. The Nikkei is all the way up here, and Japan's here, and so much more, and they've had this fantastic rally, and Japan's a disaster. Japan is a complete disaster. They are 300% of their GDP in debt. 40% of the revenues that the government takes in go to, and this is that, and by the way, this is at 0.25%. So paying 0.25% interest on their notes, it still costs Japan 40% of their collections of their government revenues to service the debt, because it's 300% of the GDP. If the interest rates normalize, it'll be all of the revenues of all the government revenues will be just needed to service the debt of the GDP. Meanwhile, while this is going on, they're still going 10% further into debt each year. Their budget deficit is 10% of their GDP. Well, it's only 3% of, oh, good news, 3% of their debt. It's 10% of their budget is deficit, but that's only 3% of their debt, because their debt is 300% of their GDP. So good news for that. Complete catastrophe. And their markets aren't great. And the only thing that's great for Japan is the fact that their cars are selling like hotcakes, because they're getting foreign currency for their cars. And that makes their cars cheaper to buy for foreign countries. So in Europe and America, in Africa, it doesn't matter what foreign currency you have, it's better than the yen. So whatever foreign currency you have, you buy your Toyotas and you buy your Hondas, they are a good deal. Not only that, but the fact that the Bank of Japan still has 0% interest means that they are able to finance your car. So Toyota financing, Honda financing is able to give you a much better deal on your financing rates than American companies because they're borrowing from the Bank of Japan at ridiculously low rates. They're all subsidized. It's a gigantic subsidy program. And who's aware of this? Donald Trump. He fixates on this stuff, and he's right. He's right, but he's also wrong because it's not hurting us. It will hurt us if he starts putting tariffs on everything. But worse than hurting us, it will cripple Japan, who is a major ally. And not only that, though, but if you destroy Japan's economy, you take down our economy with it. It's all connected. And so that's the problem with Trump's philosophy, the isolationist trade war philosophy that he's got, is that we don't go it alone anymore. The world doesn't work that way. And it's not going to be okay if we crash China and crash Japan and let Russia run wild over Europe. These are not good things. It does matter. And we are going to have, we can have from these kind of things, we'll have hyperinflation. Well, I mean, obviously, if you're gonna tax everything that comes in from China 100%, which I can't. All right. Elon Musk said yesterday he's going to give $45 million a month to a super PAC for the GOP, right? A month. Typically these super PACs raise, not super PACs, typically the entire donations to all contributions for campaigns, 100 million a month is a lot. He's putting in 45 million a month by himself. A bunch of other billionaires are putting in a ton of money as well. So it's, on the national election, whoever wins is going to win. But here's the thing: Trump will probably, because, all right, you're now comparing Trump, who seems invulnerable, right? He got shot at, he's fine, he jumps up, he raises his fist, he's triumphant, blah blah blah. You're comparing that to Joe Biden, who's a walking corpse. Honestly, it's as much as I don't like Donald Trump, it's really hard to vote for Joe Biden. It's really ridiculous at this point. But side by side comparison, it's not even close. So now you have to imagine that the situation is Trump doesn't need the money that's coming into the GOP. He'll take it, but he doesn't need it. But it also means that a huge amount of this money can be distributed to all the down market, all the down level races, all the senators, all the governors, all the House of Representatives, and they can outspend their opponents 2-3 to 1 on the local levels. And that can cause a landslide for Trump. Means he gets the House, the Senate, he's already got the courts, and so you could get 100% tariffs. As insane as it would be, there won't be anyone to stop him, and we can get 100% tariffs on foreign goods coming into the country. It is not necessarily a good thing. The idea of doing these things to protect American jobs, we don't have enough workers to fill the jobs now. We're out of workers. We don't have anybody sitting on the couch. You might say, oh, we want better jobs. There are no better jobs. It's just the jobs are the jobs. We're not going to create better jobs. It'll take many years to build manufacturing up to accommodate an American workforce, and that would take a huge amount of investment, and it's a whole mess. The tariffs alone don't do it. They just cause chaos and really hurt the consumers who have to go to the store the next day and pay 100% markup for anything that came in from foreign countries. That's not helping anybody except for, well, it's not helping anybody. It's money in it's money in that balances Trump's budget, not really balances because it's already trillions in debt, but it balances the budget and allows him to enact further tax cuts. So people pay so it's revenue neutral for the government. They're still running a deficit, but it's revenue neutral as far as the new tax cuts, and therefore he says it's a good thing. But who's paying for it? Well, it's coming out of consumers' pockets to pay the tax cuts. That's what ends up happening. So not good. But anyway, so you got to be aware of the fact that this is priced in yen, and it's not very impressive that it went up. It went from 20,000 to 40,000 at the same time that the yen went from 13,000 to 6,000. No, 13. I'm sorry, 1.3 to 6, 50% drop. So the Nikkei doubled because the thing the Nikkei's priced in dropped in half. Therefore, you need twice as many of them to buy the same amount of stock. It's not hard. It's not a hard concept. I should run for president just so I can do this stuff. I just like to do, I just like to get on TV and be like, okay, this is what's really happening. Stop paying attention to these people. They're just bullshitting you. All right, anyway, so Japanese authorities are suspected of having spent 3.5 trillion. See, it sounds like a lot, but it's nothing, right? 3.5 trillion yen is $22 billion to support the yen after the point record. You remember when $1 billion was a lot of money? It wasn't that long ago, 10 years ago, $1 billion, you'd say $1 billion. 10 years ago, literally, if somebody did something that cost $1 billion, we'd be like, ooh, ah, ooh. Now $1 billion is literally like $1 million was 20 years ago. Somebody look at, I mean, think of it this way. Somebody's a millionaire. You don't get excited, right? Somebody's a billionaire. You're like, a billionaire. Okay. Soon, but now the top guys have 100 billion, 200 billion, 300 billion dollars. They are going to be trillionaires soon. Trillionaires are 1,000 billionaire. 1,000 billion is a trillion. You will in the next 10 years feel the same way about a guy being a billionaire as you do now about people being millionaires. 20 years, let's say. 20 years for sure. You will feel someone's going to say, oh, he's a billionaire. You're like, so what? He's no Elon Musk. He's no this or that. Like Howard Hughes. What was I forget how much money Howard Hughes had. How rich was? Right, he was the gold standard for money. He was richest, blah blah blah. How much money did he inherit? How much was he? 3.5 billion. We wouldn't. I mean, wouldn't even. I don't know if that means in today. Oh yeah, in today's dollars. Oh no, he's saying it was 50. No, I'm sorry. So he had $1 billion. He had 2.5 billion. Would have been 55 billion now, but 55 billion is 30, 40 in the world now, something like that. That was a lot of freaking money. So he was the guy who had all the money. He was the trillionaire of the day back then. That's why everybody was so fixated on the guy. I mean, he was effectively a trillionaire by comparison to anybody else at the time. And that's going to happen to billionaires. They're going to be in the same position because you know who Howard Hughes was. All the rest of the guys faded out, right? So it's going to be the same as Rockefeller, somebody like that. But these days, really, you hear $1 billion is being spent on something. Like, so what? Like, wake me up when something happens. So I talked about the RNC and what Trump's platform is. Broad tariffs, which will escalate trade and drive inflation. Tax cuts, lowering corporate tax rates. He wants to lower corporate tax rates to 15%, which is like, remember we used to complain about Ireland because they were only charging 15%? He wants to charge 15% to corporations. It doesn't really matter. That's all they pay now anyway, so it really isn't going to change anything. But officially, they won't have to lie anymore. It's 15%, or frankly, they will lie. They'll end up paying. So right now, it's supposed to be 30%, and they're paying 15%, and they're paying 15%, 12% on the average. You lower it to 15%, corporations may pay like 6 or 7%. That's what's going to happen. They're going to pay basically nothing in taxes. It'll be almost impossible to stop them. And it's funny because his two proposals are eliminating taxes on tips for waiters, which will save $12 billion a year for the waiter. Yet the corporate tax cut will be $1.2 trillion a year saved by the richest people. And the waiters get the bill for that deficit. I think it's just amazing how stupid people are. Energy production, increase oil, natural gas, and coal. Isn't that what we're trying to get rid of? That's a disaster. I mean, at this inflection point for the planet, this is what we're doing. Immigration. He's going to deport people. He's going to spend so much money deporting people that we could just take all these immigrants and give them a house and educate them and train them for jobs. Instead of kicking them out of the country, we could create a workforce. I mean, round them all up and, oh, for God's sake. Deregulation and plans to deregulate business. Oh my, I mean, holy crap. There's so much horrible stuff that the FDA saves us from all the time, and the EPA and whatever, and you're going to just dismantle that and let companies pollute and let companies have bad products or do whatever they want. It's just horrifying. And then Trump, I mentioned Trump's threatening Powell to keep it in line for him into the election. I mean, why not? If you watch the movie The Untouchables, right, Al Capone, he's Al Capone. He's just flagrant. He does flagrantly criminal things. He never gets prosecuted. He gets he gets a wrist slap on anything he does. He keeps going on. He's untouchable. That's what the movie is called, The Untouchables. He's untouchable. And so therefore he gets, and like Al Capone, he just gets bolder and bolder. He goes out. That's what happened to Al Capone later in his career. He would just get up on the streets. He would just stand up on city hall steps. They would have him in the courthouse. He'd make proclamations as if he was the man. You know, because Capone didn't matter what he said went, and he ran Chicago. Everything else in Chicago was just a background for him. Nobody could do anything that wasn't with his say so. That's where Trump is now. And this is what Caesar did 2,000 whatever years ago. Julius Caesar, when he came back to Rome, he was a huge war hero. They granted him all these powers, but then he took more power, and then they put the Roman Senate in a bad position, and they granted him more powers to appease him, and then he does something else bad, and they try to appease him again and give him more power, and soon he's controlling the Senate, he's controlling the courts, and then they vote him. They vote him emperor. Oh, no, that's not good enough. I want to be. And eventually he got voted, quote, by the same thing you see what's happening in the Republican convention. He's voted by his flunkies. They vote him and give him dictatorial powers and call him the dictator. They call him the dictator of Rome. They said, you are the dictator for life, dictator for life. That's what he got. They handed it to him. He didn't take it. He didn't take over Rome. He didn't have armies. They didn't even have riots. People loved him. They loved him, but he wrecked the place. And eventually, the entire Senate turned on him, and they all took turns stabbing him to make sure they all. It was basically like saying it was unanimous, like unanimous consent. They decided to kill him, but it didn't help because they didn't dismantle his power base. And then the next Caesar, his son, and the Caesars after that, they still had too much power, and they just ran the whole thing into the ground. Anyway, so the Fed still doesn't think we're done with inflation. So that's where we're up to on that front. And then if we go, I'm not signed in, so we can't look at the watch list. WP. Does anybody know where we left off last week on the watch list? We were doing that last week, weren't we? So where were we up to in talking about companies? Oh, no, I gotta wait till it's signed in. I am signed in. Okay, so if I refresh it. There we go. All right. All right. Anyway, I don't know where we left off. Let's see what looks important to me. I remember talking about Disney. Oh, catalyst wise, though, I really think Disney is important to invest in right now because that movie Inside Out made $1 billion. Um, ah, Inside Out 2. Inside Out 2 becomes the highest grossing film, broke in the box office. Ugh. Oh, I don't know. I don't want to subscribe to Los Angeles Times, you sons of bitches. Ugh. God's sakes. Open incognito, that's the trick to get rid of that. La-di-da. Are we going to get to a price? 1.36 billion. There you go. Okay. So obviously they didn't spend that kind of money. So Disney's going to have a huge quarter. So that'll happen in the second quarter for Disney. So that's a bump, that's a surprise, that's significance. And then you go back to how significant is that going to be for Disney? Well, now keep in mind, it's not like they didn't know that they were going to release this movie. But look, this is how you invest for earnings. Okay, you got to think about what happened to this company in the last 90 days. And what are they going to talk about? And will it be surprising? For whatever reason, the stock continues to sell off, even though, wow, it's big money though. So a normal quarter for them is $2 billion, right? They're projecting $2 billion. They knew they were going to have this movie. There's no way they knew it was going to take in this much money. So let's say, very, very conservatively, it made $200 million more than they thought. I think probably more like 400, but let's say it made 200 million more than they thought. That's a 10% plus to earnings. They thought they were going to make $2 billion for the quarter. They're going to make $2.2 billion for the quarter. If I'm right, it's going to be $2.4 billion. That means they are miles ahead of schedule for getting to 10 billion. Not that they'll make that every quarter, of course, but but they've also got more big blockbusters coming out. And also it's an indication, because not only did Inside Out do well, but I can't remember, but whatever the next movie is did very well also. Top box office. Despicable Me. There you go. So Despicable Me, 44 million. I don't know if this is today, July 12th to 14th. Yeah, close enough. All right, so there's Inside Out. This is domestic numbers, not international. So Inside Out 574, Despicable Me, which was only out 2 weeks, which is half as much time, is still doing very well, but that's not Disney, of course, so we don't really care. Oh, you know what it is? Because when you go to this movie, you see all the previews for all the upcoming Disney films, and that's something. In fact, I did go see this because Jackie wanted to see it when she was down here. I saw this movie, which I did not think was good, frankly. I don't understand how this thing made $1.3 billion. Jackie liked it. She's college. She's getting out of college. I honestly did not. But I thought the first one was cute. The second one, I didn't hit me as a good thing. But anyway, so while you're watching it, they show you what's coming up, and there's a lot of good movies coming up for Disney, a lot of big things. not just Wolverine and Deadpool is going to make $1 billion. I can tell you right now, it's going to make $1 billion unless it completely sucks. Even if it completely sucks, it'll probably make $1 billion. Speaking of $1 billion not being much money, right? So anyway, point being, there are more movies coming out. Disney has been in the spend phase. There was COVID. There was the writer's strike. So, you know, they're just coming back into a swing. So now's the time to get in before it becomes obvious to everybody that they're getting into the swing of things again. That's how you pick something that's when earnings are coming up. You have to look and analyze and think about what's, you know, what are you seeing that other people are not seeing? Why are you on that? Oh, that's something else. Okay. So Disney, Ford is chugging along. Ford just jumped 10% since I wrote this. I wrote this a few days ago, and Ford's up 10% since then. So that's obvious. Future Fuel, I always like. I'm not going to do quick things. FL's good. They're chemical. Oh, remember talking about them. Gilead, I remember talking about. Also, wow. It's a big move since last week. GNRC. Oh, they just announced. Brain. Generator for electric cars. There you go. Yeah, backup generators for electric cars. Brilliant. So you can have your electric cake and your backup fuel supply too. So I think that is brilliant. I think that's a huge avenue for them. So this is a good stock. Gold, obviously gold is popping. I don't understand why this is still so low. It's actually 1778. Last week it was 1778. Now it's whatever, 19. But I don't understand why this isn't around 22, 24. It's weird. So see what earnings say. Honeywell also popping already. IMAX will also benefit from all these movies coming out. So very good time to get into IMAX. International Paper, paper over plastic for sure. So long term, I like them. IVZ, I don't understand how they could be doing badly when the whole investing environment is so good. Weird. Jack in the Box. I very much like Jack in the Box down here. I think they're a great play, should be in our portfolios. Nordstrom's, you know, you don't go wrong catering to the top 10%, and it's a very reasonable price, so I like them. And who just got bought? Neiman Marcus just got bought by somebody. Is it Saks? I think Saks bought Neiman Marcus or something like that. Oh, KLG is what used to be Rewalk. Oh no, it's Kellogg. Sorry, I'm confusing my companies. KLG used to be Kellogg, right? It's really just a cereal business of Kellogg, and it's gotten knocked down a lot, which doesn't make any sense to me because it's super strong. It's trading at 10 times earnings. I mean, why? You know, it has a limited upside because you're narrowly focused on cereal, but they're also free to now develop their own stuff. They're now their own company. Nothing stops them from doing other stuff. So, you know, it's a cash machine. Cereal is a cash machine. It costs nothing, and you're charging ridiculous amounts of money per box these days. Here's KHC. Also, I think they just had good earnings or something. I'm pretty sure they just announced. Either way, though, it's like they're stupidly low. Coca-Cola is, if it came down, I'd like it. I'm not going to chase it. Leibu is biotech. It's down 7%. Leibu is biotech. It just, the whole industry I like. I think you got to cherry pick it though. I'm not sure I want to go with Leibu anymore. Levi, also when it's cheap, I don't see any reason not to buy it when it's cheap. This used to be Rewalk, LFWD. I like Rework. It's using exoskeleton. It's an exoskeleton technology that allows people who are paralyzed to walk. It's mostly if you have no function, it can help you walk. There's a more intricate setup for that. But if you have like low function and low strength in your legs, it's an exoskeleton that gives you the strength to stand up and walk around and do stuff. It's great. And the big issue is whether or not, whether or not the healthcare companies, will health insurance pay for it? Most importantly, will Medicaid pay for it? Under Trump, it's not necessarily going to pay for it. That's the problem. He doesn't want Medicare to pay for anything. He doesn't want Medicare to exist. This is an expense, but you have to weigh the expense. See, the problem is it doesn't replace a wheelchair. This is where the real problem is. It doesn't replace a wheelchair. So currently, if you're on Medicare, you can get a wheelchair, you can get an electric wheelchair, you can get a hover around, whatever. This doesn't replace those things. It doesn't say you never need that. It just allows you, it's like a toy that lets you go take a walk once in a while. It can't be, it's not a 24/7 functioning way to get around, but I mean, just imagine if you're paralyzed and you sit in a chair and this thing allows you to walk around and go like normal places and be with your family and so on and so forth and not have to take a chair everywhere you go. How do you deny that? How do you say that's not necessary? I'm sorry. Very sad. Anyway, I do think eventually, and I think in Europe, it's going to sell. That's the thing. I think Europe's going to allow it. And it doesn't matter if America doesn't allow it. If Europe allows it, and they can sell it in that market. But if America doesn't allow it, it makes it a hard to sell for Europe also, for them to get their people on board. Lovesac, stupidly cheap down here. No reason not to buy that. Las Vegas Sands. Yeah, I not want to jump on because of Macau is, because they have too much China business. Same problem with MGM, too much China business. It makes me a little nervous. MDT, medical supplies, again, with an aging population, how are you going to go wrong with this? And Medtronic makes replacement parts for people. Hip replacement, joint replacement, not lung replacement, whatever they make, artificial heart stuff, a pacemaker, so on and so forth. That's what they do. People get old, people fall apart, people don't want to die. That's not going to change. So this is a great freaking long-term business, and it's only trading at 14 times earnings. That makes no sense. And again, it's not going to be phenomenal growth. It's going to be slow, steady growth, general market share improvement, so on and so forth over time. But that's a good reason to own the stock. Not everything has to be a 10-bagger. Something could be just a good investment. MGM, like I said, too, China, China's worrying. This Macau stuff is worrying. MGM has less of it than Las Vegas Sands. So, a little bit more exposure. The other thing, though, is also Las Vegas is becoming almost like Qatar. It's like almost uninhabitable on the outside. It's 120 degrees there on a often basis. They're luckily, this would have been the heat we're having now in Vegas and other places. If we hadn't had that massive, massive rain last year, the rain and snow that we had last year that refilled these reservoirs that were so dangerously low, it was going to be a catastrophe. And we had a big, huge thing. So now they're all evaporating again, though, in the heat. It's 120 frickin' degrees. Middleby. Again, this is an investment in the restaurant industry, basically. That's what they make Viking stoves and other cool stuff like that, but the main bread and butter of Middleby is supplying restaurants with cooking equipment. And so you're kind of betting on the restaurant industry, but again, it's 12 times earnings, and it's not like restaurants don't need ovens. It's not like that's going to change. There's not a new sudden way of doing heating and cooking and so on and so forth. Also, they've got the traction, they've got the placement, they've got the salespeople, they've got all the items, they know what they're doing. They're not going to get displaced. And there's nobody looming on the horizon like that. So, of course they have competition, but honestly, they've got their share. They're in good shape. It's just like investing in Whirlpool or something like that. It's a great stock, good price. Why not? MP, domestic supplier of rare earth. Again, this seems like one of the biggest no-brainers on the market. It's trading at 4 times earnings for next year, but the problem is this year they're in a big thing and so their earnings are nothing this year. But next year, if they hit their numbers next year, they're going to be at 4 times earnings. That means this stock should be at least double where it is now. And what are you investing in? Rare earth, and especially if Trump comes in and allows him to start strip mining instead of being careful about the environment. He's going to say, just get in there and dig it all up. It's going to be phenomenal for them. So a lot of stuff to buy, isn't there? And we got Moderna. Again, I'm trying to short story all these things so we can get through them. Moderna, the short story on Moderna is they obviously they developed the COVID vaccine. Their procedure allowed them and Pfizer to create the COVID vaccine, but Pfizer really distributed what Moderna invented. Moderna came up with the COVID vaccine. Pfizer distributes the COVID vaccine. They make tens of billions of dollars each selling the thing, and now they're back to normal. Now it's normal amounts of money. Still revenues coming in, but not ridiculous revenues coming in. Although 8 states this recently, like the last couple of days, 8 states reported very high, dangerously high incidence of COVID again. So, because relax, because we relax. We're doing nothing. We've completely stopped caring. And of course, COVID doesn't care if you don't care. It's going to come back. It's like the flu. If you don't take precautions, you're going to get the flu. That's what this is. We don't take precautions. People are getting it. So 8 states are essentially heading towards an emergency status of COVID. And you know, people are in no mood to put masks on or do anything like that. Or get vaccines at this point. Maybe that's a problem. But anyway, so I don't look at COVID. I don't worry about Moderna as being a COVID company. I look at Moderna and say, this is a startup. It's almost like a startup. It's a biotech startup, but they've proven their technology. Their technology works. They can identify a virus. They can come up with a cure, and they can scale it up enough to vaccinate the entire fucking planet in a very, very short amount of time. Nobody else can do this. And I mean, you know, other companies can do it like them, but I mean, this is not like a lot of people can handle this kind of thing. So they've proven the entire thing. It's not just a pipe dream. They can do this. So whatever the next thing is, they're ready to take care of it for us and get on it. Plus, they're working on curing big things like cancer and stuff like that. They're working on vaccines and cures for that. And if they hit that, of course, that's $1 trillion market. So it's just like a startup, except they've got a completely proven proof of concept, and they have $8 billion in the bank because of all the freaking money they made. And they're burning $2 billion a year. So they got 4 years of cash burn ahead of them for the next thing to come up. And the next thing is most likely going to be COVID again. They'll get more money. So I think I think this is a really good thing to hang on to. Mittal, European steel, again, basic, nice stuff. 6 times earnings. It's freaking steel. Did we stop using steel? Did I miss a memo? Come on. Nike, holy crap. It's still Nike. You know what, Nike? And plus we have the Olympics. So that's a catalyst. To me, that's a catalyst for Nike right now. You got the Olympics now. Here's the problem with Nike. Nike, their mentality is very much based around having super duper star athletes like Michael Jordan, things like that. They name their sneakers after people. They name their brands after people, their sub-brands after people. People don't buy Nike because it's Nike. They buy Nike identified with an athlete, and they've depleted their stable of star athletes. They kind of tried to go a different way and be more like Nike brand because they're jealous of like Lululemon, because Lululemon doesn't have any athletes, but they still make money. You know, so Nike doesn't like, and Adidas also. Adidas doesn't really rely on star athletes. They just sell sneakers. The problem is Nike has been a $300 sneaker company, which I never understood the whole concept of it, but you're not going to sell a $300 sneaker without the star athlete. So now they're trying to be a $100 sneaker company and just make really good sneakers without all the branding, and it's a very, very tricky transition for them. So they'll probably find a sweet spot somewhere in between. They're not going to give, and you know, even Michael Jordan, you know, had scandals. That's the problem, though, is these days, back in the, back when Jordan was playing, when this whole thing started, a guy could get in trouble and it would wash over, okay? But now, when you give a 10-year, $100 million contract to some athlete, if he sneezes on somebody in the subway and doesn't say, excuse me, it's going to be on video, and his career can be ruined or whatever, or God forbid he says something on social media. It's like you can't control these people anymore. So to base your company on a superstar like that, it doesn't work. It doesn't make sense. You don't know what somebody's going to do. You don't know who's going to be a good person and stay on the straight and narrow all their lives. And it's tough. In the Me Too things and everything else that goes on, it's very, very hard to say this is a guy I'm going to go with for the next 10 years. So that's what Nike's problem is it's not the same world it was, 20, 30 years ago. And you just can't play the same game. And so they're trying to change to go with the times. Meanwhile, though, they've got the manufacturing, the global presence, the well-known. They've got the distribution network, everything else. They will figure it out. But I think just ahead of the Olympics, even though it's still 23 times, I still think it's so much lower than they have been for years and years. I still think it's something I want to take a flyer at. NLY, they keep paying this dividend, 12%. It's a REIT. It's not an unsustainable dividend because a REIT, by definition, distributes 90% of its earnings through dividends. So they're not paying 12% because they're crazy. They're paying 12% because that's what a REIT does. It distributes some money back to the shareholders. They're not going to cut their dividend. If they make less money, they'll cut their dividend, but they are going to continue the way they're going. And since their money comes from rolling over rents, not rents, it's a rolling over mortgage contracts. They buy mortgage-backed securities and flip them over. It's a pretty steady gain. And frankly, they've been hurt by by high interest rates. They will get better as the Fed gets better, and so you'll get improvement in the stock price. Plus, you'll still get the dividends. And by the way, when the stock price improves, the dividends is an interesting thing. You buy it now, right? You buy it for $20 now. It goes to 30. Now, if it goes to 30, that's up 50%. That means the dividend will go down by a third, and you'll be getting a 9% dividend. They didn't cut the dividend. They're just distributing the same money against a more expensive stock price. But you paid 20. You're still getting the same money against your 20. See, that's what people don't understand. I don't give a shit if the dividend goes down because the stock price went up. It's not like they're making less money. They're making the same money they always make. It's just the stock price went up, and that apparently makes the dividend go down. Get it? And again, it's very easy to explain, and nobody ever explains it to people. It's not complicated. OLN, it's an interesting company. They do chemicals and they do ammunition. But meanwhile, chemicals and ammunition are things that we use a lot of. They're trading at 11 times earnings. Great butterfly play. I'm probably going to put them in the butterfly portfolio. Paramount, don't even get me started. Paramount has an offer. It's a pretty solid offer for $15. The way it got blown the last couple of times, nobody believes any of it. Meanwhile they're halfway through this 45-day marketing period. So they have 45 days to find a better offer. They ain't finding a better offer. They're going to have to take this one. But this offer is $15. So I don't know. I don't know why it's still at 12. It seems like it's still worth it. To me, it's still worth a shot. We've already got a ton of it, so not for us, but for somebody who hasn't got it yet. Rocket Mortgage, a company worth learning more about. They're trading at 31 times earnings, and it's a terrible mortgage market. Obviously, that will get better, but they are growing. Doesn't matter. They're making less money, but they're growing, and they are taking over the entire freaking mortgage industry. So I like them long term. RH, I always like RH when they're cheap, and they're definitely cheap right now. They're 28 times earnings, but this is, I mentioned that this is $5.4 billion. So this market cap is $5.4 billion. They used to make $500 million. They changed the company from being Restoration Hardware to RH, which is more like a lifestyle brand. So when you go to rh.com, you see the picture of like their plane, luxury plane interiors and things like that. They're working with the same thing. I'm sure most of you guys know, RH Hardware was like super duper nice kitchen crap, Restoration Hardware. So they said everybody, there's not like a lot of places where you can go on this scale to get these luxury fixings for homes. I'm sorry, for the bathrooms. Bath, here you go, bath. Furniture, man, oh Jesus Christ. Yeah, well, there's too much stuff. Bath collections, there you go. That's a good idea. Are they going to take us to that page? Bath. What the? No. Oh, it's a terribly slow website, isn't it? Anyway, so if you're spending hundreds of thousands of dollars on a bathroom, this is the place to go. And they said, well, we have this very, very loyal audience of ultra wealthy people. And you have to realize that there's 8 billion people in the world, and the 1% of 1% of 8 billion is 80 million. So the top 1% represents a buying audience of 80 million people who would be interested in this sort of thing, of the top people in the top 1%. So they're like, okay, they've captured a tremendous market share of these 80 million people who use them to furnish their bathrooms. They're like, well, what about the rest of the house? So very logically, several years ago, they spent a tremendous amount of money branching out into living rooms, dining rooms, bed, bath, outdoor, lighting, textiles, rugs, decor, blah, 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 and airplanes. So it was probably under living, I guess, unless they mean living room. They probably mean living room, fabric tables and stuff, blah, blah, blah. Okay, anyway. But so they are, so they furnish your boat now, they furnish your, your plane, they do this and that. It's a smart move, but the move took, they had to build all those connections and make all those arrangements and get all the stuff and create an inventory and so on and so forth. It was freaking expensive. They're just coming out of that phase. And not only that, they don't have market share in these spaces. They have a huge market share in bathroom. They have no market share in living, dining, bed, bath, whatever, in bed, outdoor, whatever. That's not their space. They have to build and fight and raise awareness and do all that. So people have heard of RH and they know who they are. They know the quality. They like it. So they're willing to pick up a catalog or look at them and think about them when they're shopping. But still, rich people like what they like, and they don't tend to. It's very hard to get them to switch. So it's tough. It's a tough road they've chosen, but it's a very worthwhile road that can lead them to like doubling, tripling their sales very, very easily. And these luxury sales, you make a fortune. The price gouging is incredible on these items. So for those reasons, I like them. I think that you're picking up a company that's doing something to build a future. They know they can make this kind of money. This is when they make $500 million. They know they can make $500 million. They want to make $5 billion. That's their goal. And to do that, they spent all their money for the last few years to transition to become this major player. I think it's great. Where are we then? Rio Tinto, again, copper, gold, iron ore, aluminum. It relies on the global economy, but they're trading at 10 times earnings. It's just where you want to be on a cyclical. come in and take that. Oh, that's all I got up to. Oh, wow. Look, I accomplished what I wanted to do. And now I have to tune in next week so we can finish this off, hopefully. Wow, I got through everything. All right, next week, please, somebody remember we're up to the S's. SoFi has popped a lot since I started. Like last week it was at 6, and I was like, this is the biggest no-brainer on the planet. 623. So it was the biggest no-brainer on the planet. Now it's 778. It should be 1012, and we have a lot of bets on that already. Sony just popped to the point where I wouldn't chase it. SPG. Oh, and that's all I got up to. So interesting. All right. Then there's so in addition to this, there's a whole nother still from S onward. I got to pull off the old watch list, and then those ones that we were talking about a few weeks ago. The new ones I want to add to the watch list. I got to incorporate those. So it's like a whole month-long project. This is going to be. This is what I'm doing for July. I'm basically going over these stocks endlessly and picking them out. But the bottom line is, look how many things there are to buy still. So stop, don't chase the stuff that's already gone up. In fact, this is on FinViz. I find this very useful, this heat map. Oh, look how ugly that is. That's the usual. Usually the market leaders are not leading, but look at everybody else. This is just rotation. All this horrible thing going on in the NASDAQ is nothing but a rotation. People are buying this stuff and selling this stuff. So anyway, so this is time frame. There it is. So this is today. But if you look at this for like this year, 6 months, right? Wow. Everything's done great. But then you got to look at this. You look at a chart like this and you say, well, who hasn't done great? Intel. I like Intel. Let's buy them. Cisco. Love Cisco. Is Cisco not on my list? No, it probably is. McDonald's has been having a rough time. Starbucks has gotten killed. Nike, we just talked about Nike, 28%. I like that. Boeing, time to buy. We already talked about them once. Mondelez is worth taking a look at. See what they are. KHC is one I'd like. Isn't this a lovely thing, though? This is in FinViz, just if you check on the main box. This stuff comes up, and you get to check all these things out. See how nice it is? It brings up the other things that are in the in its space. So you can compare it and see how everybody's doing. See, I love that. So this is how it's been for this year. Here's Gilead, who I like. BMY, not so crazy. J&J's is cheap but not super cheap. But it hasn't, J&J hasn't gone up with everybody else. I'm not a fan of J&J though. Schwab, interestingly, huge underperformer. Huge underperformer. -3 versus +32 and +23. I mean, that's insane. So we want to, you want to make sure you're not buying getting a turkey. Prudential, I said this last year that when you have high interest rates, the insurance companies who are forced to invest in very, very conservative instruments benefit from high rates. Their insurance reserves, which are massive, have to be invested in things like bonds. They don't have much flexibility. It's highly, highly regulated. So they can't put it into the stock market. They have to invest in securities like that. And therefore, the higher the interest rate, the more money they make. Very simple. It's not complicated. That outweighs bad luck from all these hurricanes and whatever. But still, you got to make sure what's their exposure, how are they doing, so on and so forth. I think Allstate, Aflac, and Prudential were our picks last year. So, so for me, again, I'm a value investor. I don't really, I don't want to look at ones where they've gone up too much. Now, Home Depot only went up 4%. They're worth looking at. Let's see, why do they only go up 4%? Can they catch up to the other ones? Why is Lowe's up 11%? Home Depot's up 4%. Home Depot's not worse than Lowe's. Now we know why Boeing is down, but still it's a matter of where they are. UPS versus FedEx. Look at this. This is very interesting, right? UPS down 5, FedEx up 26. I'd say short FedEx is probably the outcome, but that's, you know, we got to figure out which is which. Wow. Anyway, so I find this chart very useful, and you can change the time frames. You can go 1 year, and it doesn't go longer than a year. I wish it did. And you can also even do the PEs and the forward PEs and so on and so forth. That's cool too. So you can have endless fun with this thing. And that's just, oh, it says elite. Maybe it's because I pay for it. I do pay for FinViz. And I'm glad I do. By the way, I'm glad I do. I use FinViz forever because I like their self-updating charts. So it's great, like especially for things like the watch list, because when I go to the watch list, when we refresh it, it refreshes to the actual day and it's always current. That's worth the price of admission right there. So I've always used them for that reason. But in the elite that I started paying for, you also get, well, I don't want to say you didn't get this, but you also get nice news and you get this stuff, things like this. I don't know what, I can't tell you what is and is not different from when paid, but I do know that I've been paying for it and I really feel like I'm getting my money's worth out of these guys. So that's my commercial for FinViz. Hopefully they'll give me a free month or something. So, okay, so we're going to wrap it up there. Plenty of things to buy. No reason to rush. No reason to jump in even on these things, though, until we see the earnings. Because let's say earnings are great, and let's say people start popping and things start going up. There's still going to be 3, 4, 5 stocks out of a list of 100 on our watch list that didn't pop. And it's just a matter of going and picking the ones that didn't go up for whatever reason, and maybe one of them, a couple of good ones. How many stocks do you end up buying? In our whole portfolios, if you have 40 stocks in your portfolio, that's a lot of different stocks. And so 40 stocks means every quarter you buy 2, 3, 4 stocks, and before you know it, after a few years, you got 40 stocks. So there's no reason to be in such a rush to buy things. Even if you're starting at zero now, take your time and get the right stocks in the portfolio, get a good mix, diversify, so on and so forth. All those things that people tell you to do that. And in fact, when I was doing the portfolio reviews, I was thinking about that because it's one of the things that we try to teach people. The reason we organize ourselves this way is because 557, so it's stabilizing at 20. So, you know, the reason I do these monthly reviews and so on and so forth is because I want people to understand it's like you don't have to jump on things. You don't have to react to everything. You can take your time and step back and wait a week, a month, a quarter, and make sure that it's not just a quick bounce or something like that. Make sure it's a real trend that you're following and something proper that you're putting it into. So we set up a watch list. If we like something on a watch list, our first move is often to just sell a put against that stock, and that moves it from the watch list to the portfolio, which means we're going to be reviewing it every single month, right? So if it's in the portfolio, we're going to be watching it every month. If the stock doesn't come down again or doesn't give us a good entry, it just ends up paying us out on the put. There's nothing wrong with that. That's free money for us. If we like the stock, we start building a spread. And sometimes we'll sell some stocks against the spread for an income, and sometimes we'll just let the spread stand. But it's incremental, and we build into it, and and also we scale into the position. So we start off with a relatively small position, and we build it up. When do we build it up? When it goes on sale. And since we're planning for 2-3 year holds on these stocks, we have a lot of time to see something go on sale, even if we like it at a certain price. It could still take a dip. It could still have a bad earnings report and whatever. Oh, and by the way, that's another thing about earnings season. When in earnings season, we're looking at our watch list and we see one of our watch list stocks had bad earnings, we check it out. Maybe it had bad earnings. Maybe they were not good reasons for selling it off so harshly. Maybe it's a one-time event. Maybe people are reading it wrong. Those are the huge opportunities that we jump on. And that's why it's good to have a watch list. That's why it's important to have a list and to watch stocks and to also have your portfolio. So between our portfolios and our list, it's like 160, 170 different stocks that we're paying attention to. That's a lot. And we look at thousands of stocks to get down to that list. But once you're down to the list, you know, which, like I said, like right now, I'm reviewing the watch list first time. Well, the first major review since December we're doing of the watch list now. So we're looking over those stocks. Some things are deleted. We're going to add some more stocks that we like. But it's a fairly static thing. Why is it a fairly static thing? Because we've already looked at every stock in the market and we've already decided these are the best ones, of the best value, that are well run, that have positive future outlooks, and so on and so forth. So it's already a very elite crowd, and we only need to pick the best of the best for our portfolios. And that's our goal. That's what we're doing here. All right. So I'm sorry that it's taking weeks of webinars to go through the list, but this is important. Okay, this is what we do. We consider and think about it a lot, and then we make our decisions. And that's where we're at now. We're in the consideration point. After earnings, we'll have plenty of decisions to make. All right. Thanks everybody for coming, and we will hopefully conclude the watch list next week. All right. Take care. Oh, see if there's a question. No questions, because I am that good. All right, fantastic. Have a good day, folks.